Crypto for advisors. What is DeFi? DeFi can be misunderstood, but it's key to investing's future. Learn about the tech, adoption trends, and how advisors can win with clarity. In today's Crypto for Advisors newsletter, Jennifer Rosenthal from the DeFi Education Fund breaks down decentralized finance and surveys investors in the space. Then, in Ask an Expert, Sam Boboev from Fintech Wrap Up provides insights into the trends he's seeing with DeFi and AI. Sarah Morton. As we mark another anniversary of Bitcoin, it's worth pausing to reflect on how far the cryptocurrency industry has evolved and what it may mean for financial professionals exploring the digital asset class for the first time. A new national study from the DeFi Education Foundation, conducted by Ipsos on KnowledgePanel and supplemented by in-depth interviews in the Bronx and Queens, New York, shows that roughly 1 in 5 Americans, 18%, report having owned or used crypto at some point in their lifetime. Our research also found that there is a diverse demographic base of Americans who have owned or used crypto over the last 12 months, including roughly 1/4 of American Millennials, 30 to 44-year-olds. 1 in 5 Americans who identified as Black, Non-Hispanic, 1 in 5 of all American men, and 1 in 6 Americans who have a bachelor's degree or higher. By contrast, only 3% of Americans have heard of decentralized finance, or DeFi for short. So what is DeFi? Decentralized finance, DeFi, is a software system of financial applications that enables individuals to have full control over their financial transactions online. Individuals make all the decisions and maintain control over their digital assets at all times, with no intermediaries or middlemen like credit card companies. This is possible because of a technological innovation called permissionless blockchains. A blockchain is a decentralized digital ledger that securely records and verifies transactions across a network of computers without a central authority. Many believe that Bitcoin is the first example of a decentralized finance asset. Other DeFi assets include Uniswap, a DeFi exchange for crypto trading, and Aave, a DeFi tool for lending and borrowing digital assets. It can be helpful to think about DeFi as a sector of the crypto universe. Most don't fully understand how the internet is coded, but appreciate that there is an entire online economy that's investable, e.g., tech stocks. Similarly, many will not need to understand how DeFi works but may be interested in exploring the investable tools and applications built on it. Interestingly, the Ipsos research shows us that even if Americans are not specifically familiar with the term decentralized finance, they are interested in the potential that DeFi technology and innovations can unlock. For example, more than half of all Americans agree that we should have a way to digitally send money to people without any third party involved. Survey respondents also expressed deep frustration with the traditional financial system. Fewer than half of Americans feel the current financial system meets their needs. And as technology continues to evolve, one can imagine that consumers and investors will seek trusted alternatives in financial services. Relatedly, 42% said they would be likely to try DeFi if proposed legislation is passed, and would use it to make purchases, pay bills, and save money. Financial professionals have a unique opportunity to lead clients in learning about and gaining exposure to DeFi as a timely investment theme. With DeFi adoption still in this early phase, plus the newly launched suite of digital asset ETPs that provide familiar, regulated exposure to DeFi assets, the financial professionals who can provide their clients with clarity, credible research, and free resources about crypto and its sectors like DeFi will be in a strong position to win the next generation of investors. Americans are increasingly curious about the possibilities that emerging technologies and investments can unlock, and financial professionals are well placed to help clients construct portfolios that are ready for the future. The new Demystifying DeFi research provides timely, methodologically sound third-party data that can help make client conversations more concrete and actionable. For further reading, you can download the full research report here. Jennifer Rosenthal, Chief Communications Officer, DeFi Education Fund. Ask an Expert. Q. What key trend will shape the next phase of DeFi growth? The biggest driver of DeFi's next phase is the tokenization of real-world assets, RWAs. According to a 16Z State of Crypto 2025, on-chain U.S. Treasury tokenization grew over 700% year-over-year, reaching $1.2 billion in value locked. Institutions are finally entering DeFi, not for speculation, but for yield and efficiency. As stablecoin volumes exceeded $9 trillion annually, tokenized assets are becoming the new collateral backbone. The next frontier is regulated DeFi, where permission pools and KYC-enabled protocols merge institutional trust with DeFi's liquidity and transparency. Q. How is AI influencing DeFi innovation? AI is reshaping DeFi by bringing autonomous decision-making to finance. Gartner estimates that by 2030, $30 trillion in purchases will be made or influenced by AI agents. Smart agents now rebalance liquidity pools, manage collateral ratios, and forecast market shifts in real time. This convergence of AI and DeFi is paving the way for self-optimizing financial ecosystems, where AI agents operate treasuries, execute trades, and even design new financial products dynamically. Sam Boboev, founder, Fintech Wrap Up. JP Morgan CEO Jamie Dimon now acknowledges that crypto and stablecoins are real and here to stay. MasterCard is in talks to acquire crypto payment rail company Zero Hash with a rumored price tag of $2 billion. BlackRock's Larry Fink says, "We're not talking about it enough. Most countries aren't ready for what's coming regarding tokenization and digitization of assets and currencies."